We're in pre-live right now. Hey, hello and welcome everybody to this retirement plan webinar by Benzer Capital. We'll give a couple more minutes. We were having a little bit of technical difficulties to get started. So we will get this going here in a minute. Okay, well, welcome. It's a lovely day, June 19th, 2019. Welcome to Benzer Capital, Retirement Plan webinar. Part of the important purpose of doing these webinars are to fulfill the education requirement of their retirement plans. As Benzer Capital, we are private wealth advisors to our clients, and we do a lot of work around ensure that both our clients, which are many of them are businesses, and they have retirement plans for their employees as part of their benefits, to make sure that everyone is financially successful. The employers provide these retirement plans, and our commitment to our clients is to make sure that we provide education, ongoing education, and one-on-one guidance to the community of employees. So we are hopeful that these series of webinars are helpful to you in order to conduct and ascertain the benefits that you're receiving, and ask questions. At the end of this session, I will share some contact info where you will be able to communicate with myself or my staff to schedule a one-on-one appointment to review your specific plan and your specific 401k benefits. So please ensure that there are many different employees from different employers or different companies present on the call today. And so, refrain from asking any personal or sharing any personal detail or specific questions. I'll try to cover some general details and general 401ks and or retirement plan information. But if there's anything specific to you or your company, please, connect with us at the end or online, and we will schedule a quick time either after this call immediately or at a later date whenever it's feasible for you. So welcome to Benzer Capital. A little bit about us. We are recognized as a leader in wealth management. We are fiduciary financial advisors, which means that we work in our clients' best interest. We are required to by law. We provide customized multi-generational wealth strategies for families, businesses, and institutions to conserve and grow their wealth through generations. We believe this can be accomplished through three principles: the principles of estate, the principle of tax planning, and investment. And so today our focus is going to be tax planning piece of retirement plan. And I'm going to share with you three simple tax saving tips using retirement plans. My name is Salim Nathani. I'm founder and principal at Benzer Capital, and I have a wonderful team that works with us on each one of those principles. We have providers within our practice that help people with their estate, their tax. And I am the CIO, Chief Investment Officer, and I help with the investment planning. We have innovative and trademark processes for investments, for example, and or estate planning. And so we actually bring some very forward-thinking strategies for our clients. If you're interested in sitting down and having a complimentary consultation that's available to you, please reach out to my staff. So we are looking at retirement plans, and so in general, retirement plans are about the most important ways now rather than pension plans. So what we're going to be talking about are what's known as the employee-driven or the employer rather than the employer-driven plans. So these are plans that are not pension plans. These are retirement plans that are more 401ks, IRAs, that simple IRAs types of plans. Couple of quick disclosures. We want to make sure that the information is general in nature. These are not specific tax advice for anyone. So if you have specific tax questions or investment questions, we ask that you consult your tax advisor or investment advisor. We can, in both of those capacities, help you in creating specific tax strategy and investment strategy, but this particular session is general in nature for that reason. The other disclosure or requirements to cover is a state requirement. So when you're logged in to the session, you are required to type in your name, your email address, your phone number. There was a reason for that. We don't like to create barriers for no reason. The state requires us to log every single participant in these types of educational webinars. This is also important for your employers to keep track of who is participating in the education session and provide better service and so let's talk about tax savings tip number one. The most important reason why most people participate in a retirement plan is to have a pre-tax contribution or pre-tax savings. What do we mean by pre-tax contributions? So think about, and I usually like to sort of give a bucket analogy, right? So the question is, how does the money go into this bucket of savings that you're trying to make for your retirement? And the most important element of that is a tax savings that comes by contributing on a pre-tax basis into your 401k. So imagine you made $100 in earnings. The way you think about your net, if you would, income is you make $100, and let's say you are in the 10%. I'm just going to keep math very simple. Let's say you're in a 10% tax bracket. That means you paid $10 to the IRS, and you got to take home $90. So what a pre-tax contribution means is that if I'm going to save some money, right? Let's say I was able to take all of that $100 and put it away in a pre-tax contribution. For the sake of the IRS, it is as if I never made that $100, okay? So that $100 becomes zero, and 10% tax on zero is zero, which means that I got to keep the entire $100. That $100 is now in a retirement plan, i.e. in an account with benefit to your name, that at some point in time when you retire, you will take that money. Now, as is the case with the IRS, you either pay taxes going in or you pay taxes coming out. In this case, we did not pay taxes going in, which means we made a pre-tax contribution today. As you're traveling through time, these pre-tax dollars are going to grow. You're going to invest, you're going to make money on it. And let's say $100 becomes $150 when you retire. You get to then, because you've never paid any taxes on it, at retirement, you will have to pay taxes on the $150 because now it's deemed that you have earned that money. But remember, you had all this time, depending upon how old you are. So if you're 30 and you want to retire at 60, you have 30 years to not pay taxes and grow this money. That's substantial in terms of how much your money can grow. And so if I can keep money in a pre-tax basis, it allows you to have a substantial amount of growth more than you can do otherwise. So that's why pre-tax contributions are so important. And that's what we mean by save taxes today. The most common question I get asked is, well, how much am I going to save in tax? And the answer to that depends upon what's known as your marginal tax rate. So what is a marginal tax rate? Think of marginal tax rate as steps in a staircase, right? With each higher step being the next, higher rate, if you would. So the U.S. tax code or U.S. tax system is really designed as a step ladder, with each new ladder, garnering a higher tax rate. And so what happens with that is you start at a 10% for most people, and anybody that earns, let's say, $10,000 or less as a family pays 10% or less in taxes. And then if you graduate to making more than $10,000, you pay 15%, and you pay 21, then you pay 25, and just keep going on up to 37%. So, the marginal tax rate means the next higher or the highest tax bracket you're in. That step on the staircase, how far have you climbed on that? The higher the step, the higher the tax rate. The higher the tax rate, the higher the tax savings that you will have by contributing in a pre-tax basis, right? So for example, in my earlier example, when I said you were in a 10% tax rate, I meant 10% marginal tax rate. You saved $10 by putting money away into your retirement plan because you were in the 10% tax bracket. Imagine you were in a 35% tax bracket, you would actually save $350 for every $100 you put away because you were up on that staircase at a 35% level. So each $100 that you put away, you are able to save $35 instead of $10. Okay? So you are getting that much of a benefit that you can gain from putting money away in a pre-tax base. So for those that are in a higher tax bracket, they should definitely consider putting money away in a pre-tax contribution. For those that are in 10 or 15% tax bracket, for those that are starting off in their life, and the question is, how do I find out what tax bracket I'm in? Look at your taxes, talk to your tax advisor. We can help you, schedule an appointment or schedule a time, and we can review your tax return with you